strategic business decisions, mergers and acquisitions, and the franchise question with our speaker, Jeff DeGarmo. Charting a successful business path demands both strategy and insight. Jeff DeGarmo, a renowned merger and acquisition broker specializing in the sell side, provides a deep dive into the world of mergers, acquisitions, and strategic decision-making for budding entrepreneurs. With a distinguished Navy background and the accomplishment of leading an ad company to its IPO, DeGarmo also helms a unique venture that advises entrepreneurs on the pivotal decision between establishing an independent enterprise or delving into franchising. Attend this session to harness Jeff's vast expertise and refine your entrepreneurial journey with informed decisions. Thank you for joining Global Economic Advisory Network. I am so excited to get into this conversation with you. You have so much valuable information based on your history of experiences. I mean, you've done so much, and it's not really a through line, but it's still nonetheless very interesting, as most entrepreneurial journeys are. So welcome.
Thank you. I appreciate the opportunity to talk today.
Yeah. Okay, so why don't we start sharing? I guess I have a little bit of an advantage because you've already shared your story with me, but why don't you share with the audience a little bit about yourself and a little bit about what has brought you to this point in your career?
Yeah, so, early on in my career, I was a Navy officer, so spent 8 years serving here. Oddly enough, I was in the Navy, but stationed in Oklahoma. It's not the typical Navy career, so I kind of started out my adult life in a very strange career to begin with. During that time, I got really interested in technology and web development, that sort of thing, and self-taught how to do those sorts of things as the internet was really becoming, commonplace, really at the inception of the internet. And I decided after my exit from the military to go to the web development route. And I ended up at an advertising agency about 2 weeks after 9/11 happened. I was on a contract to hire basis, and by Christmas time, advertising and marketing had kind of, gone away after the events of 9/11, and they let go half their staff. So I was, at that point, my opportunity was to go back out on my own. So that's what I did. Still continued freelancing, still continued to do all the same work for the ad agency I had just been let go from, just as a contractor, which allowed me to really kind of grow what I was doing. Met up with a couple of other businesses that were kind of single entrepreneurs themselves. We formed a shop together that was 90% web development. And then over the next 16 years, we grew that into a full service ad agency. Really kind of focused on place branding, destination marketing, travel and tourism towards the end of our career. And we got to the point that we wanted to grow our business. We were about 20 to 25 people. We thought 50 was a good number to get to. We felt like we were at the limit of our organic growth and what we could do on our own. And so we sought out investors, was what we initially went to market with. We did use a business broker to help us kind of find some investors. And as it turned out, had several interested, probably met with 6 to 10 in person that were interested. Ended up with a couple letters of intent, chose a path, and it ended up being a public company that was like, we just want to buy the whole thing. So having a little bit of flexibility there, and, the opportunities that would come with, being part of a bigger organization like that, and where we could play and what their needs were. That was an opportunity we decided not to pass up, and we sold the business outright. I was on a 3-year employment agreement, and I quickly learned that working as an owner of a 25-person shop versus being an employee of a 1,000-person employer, very different.
Yeah.
So about 9 months later, came to agreement to buy out my employment agreement, and I was back out on my own. Perfect timing again. It was January 2020, right before COVID hit. So again, I'm entering the marketplace in a strange, world environment, if you will. And just, again, working with family and friends and past, clients that I'd worked with, just doing some freelance work. And realized that, I was going to have to kind of figure this out on my own again. And kind of like doing that. So I got into the coaching area, because I had built a business and grown it, and kind of had a pretty successful exit with a public company. I took that knowledge into really just wanting to help other entrepreneurs figure out how to do that themselves.
Mm-hmm.
And so the areas I work in is small business coaching, which is a lot of solopreneurs, small businesses, 5 employees that are just really trying to figure out, okay, if I want to sell this someday, what do I need to do? How do I need to grow it to get there? I also work in the franchise space, helping aspiring business entrepreneurs, that want to get into business. Maybe they're coming from the corporate world, but they want to leg up. They don't want to start from scratch. And so helping them identify franchise opportunities that kind of fit with their goals and passions and priorities in life, what works for their families, that sort of thing.
Mm-hmm.
And then kind of the third area is I work as a business broker, helping those existing business owners are kind of getting to the end of their time wanting to run their business, whatever their exit reasons might be, helping them figure out how to value their business and then go through a successful transition like I did.
Yeah, I mean, I think your story is so relatable to many entrepreneurs because we often have these visions, right? We think it's going to go one
Mm-hmm.
way, and then life happens, and it's like, oops,
Yep.
that's actually not the journey I'm on, and I have to learn how to pivot and shift. And I think that actually, the more you do that, the stronger of a leader you are, because
Right.
it's just another notch in your belt, and so you have all these different experiences that bring you to the position to now lead others because of them. So I think it's great, and
Right.
I think it's really helpful and useful for especially solopreneurs who are looking to enter into something that's the next level. It's never
Mm-hmm.
easy to do it on your own, so having someone that you could reach out to who's been through it is just so valuable. So having said that, let me ask you, from the point of view of a startup or a solopreneur or small
Mm-hmm.
business, what would you say are the key factors that they or anyone really should assess in their business before even thinking about an exit strategy? Like, what would determine the success of their exit strategy?
Yeah, that's we kind of typically look at 3 different areas, and we're kind of there's different areas criteria to measure, and we're kind of evaluating it on kind of a scale of either they're bad in this area or it's just non-existent, they haven't even thought about it,
Mm-hmm.
to they're best in class, or maybe they're someone like an Apple who's like #1 in class.
Mm-hmm.
What kind of that's the range that we evaluate these criteria. But the first part is just business attractiveness. Do they have something that has transferable value that someone else in the marketplace is going to say, that business looks great, I want to buy it? So that's kind of where we start. And those things can be typical business factors, just, age of the company, what brand awareness, how diverse is their customer base, do they have any specific IP or technology that's kind of unique in the marketplace?
Right.
Then even looking at, forecasts like revenue, profit trends. Do they have a defined forecast? How much of their profit is recurring revenue versus, one-time revenue? What's the market look like? Is there high barrier entry? If there's a higher barrier to entry, then they're probably more unique, and it's harder for competitors to get in the marketplace. It makes them more valuable. Sometimes even the reason for a potential sell is important. Um, Determine how fast they need to get in or out of the business.
Mm-hmm.
Risk, that sort of thing. So those are kind of some of the attractiveness of the business itself. And then we kind of get into, is the business itself ready?
Mm-hmm.
Some of those things could be, what's the value of the brand in the marketplace? Is it, really nice brand, well designed, it's got a lot of good customer feedback on it, or, if the brand something they haven't really thought about? Those things matter to potential buyers.
Mm-hmm.
And even stuff like corporate documents, those need to be tight. Contracts, you need to have a really well-defined contract, systems and processes, solid financial records. Solopreneurs really struggle with keeping their financials tight and not running a bunch of personal stuff through their business. When it comes time for a buyer to look at it, they want to see all that stuff in there. They want to know what it takes to run the business. Not
Right.
that you fed your family of 5 100 times in a year and it ran through your business as a business expense. What are the revenue opportunities? The owner's knowledge and expectations just around the whole transition process is, owners typically have this idea of what they think their business is worth. And typically that is just based on how much money they want for it. It's not really taking any sort of market criteria into place or actual, business metrics to determine that. So that's important from a business standpoint. And then the last thing is kind of really just personal readiness. Do you know what's next? If I get someone who wants to sell their business and they're coming to me and they really haven't thought about what they're going to do after that business sells, when it gets towards the end of the due diligence process and they're having to agree to terms, they're less likely to do it because then they start thinking about, oh, this is going to happen and I don't know what I'm doing after this.
Oh, yeah.
And so just that some mentality around that, they don't know what it'll take to run their family. What are their post-closing income needs? Is what they're getting from closing going to allow them to,
Figure it out.
run their family finances for a while? How long is it going to allow them to do that? Do they have to go get another job? Do they have to start another business? So, and have they told their family? Oh my gosh, I'm going to tell you how many times that family members, once they find out, they're like, no, you're not selling this business. What are you talking about? And that could be spouse, significant other, it could be parents. Friends, all of those things influence. And if they haven't had those conversations, those can be kind of challenges along the way that they haven't thought about. And knowing how that's going to work before you even kind of start the process is really important.
Yeah, that's really interesting. That's not really something that I would have thought of off the bat because, you think of, okay, how is the business evaluated, right? But you don't actually think about the personal life of the business owners and how that can influence the transaction. So when that's not disclosed or when it's, potentially just a thought, it's actually a risk. It is because it could completely defunct the transaction. So
shockingly, there's a large number of buyers that they're interested in those questions because buyers will spend a lot of money evaluating your business during due diligence, especially, in the case of the agency that I sold, it was a public company. So, we're dealing with internal and external, CPAs, accountants, legal teams, and they're digging into the weeds of 16 years of history. And there's a lot of expense to doing that. I had a recent transaction where the buyer probably spent $60,000 evaluating this business and didn't close. And it didn't close because of personal.
Do they write that off? Is the other business able to write that off? Do you know?
I'm sure, in his case, he had already set up an LLC that was going to purchase the business. So
got it.
He will eventually have the ability to write that off. But again, it didn't really come down to the business metrics itself. It was just a personal issue with the seller themselves that kind of prevented that transaction from happening. And now this buyer is out $60K, nothing to show for it other than lessons learned.
That's insane. I guess it's normal because that's just the way life is, right? It's actually very reflective of the entrepreneurial journey. You think something's going to happen and it's just not exactly that streamlined. So, we should be aware of that. But I guess it's another one of those you don't know until you know situations. But so having said that, it's sort of teetering a little bit, but it's just out of interest and curiosity. When you're, you primarily deal with the selling of businesses, right? So if someone was interested in buying a business from you or from one of your companies, would that mean that they would have to do their own due diligence, or do you do that already for them as part of the broker?
So typically I would say the buyers, they're obviously responsible for their own due diligence. We will have a very limited number of buy-side clients where they'll come to us and say, these are the type of businesses we're looking for, and we'll help them find businesses to buy. But typically, if we're representing the seller, we're helping the buyer in terms of making sure, things are moving along at a good pace and making sure that the seller is providing the documentation that the buyer is asking for. We're representing the seller, but there's also a fine balance of making sure that you're also helping the buyer along the way as well. But at the end of the day, it's their team of advisors that are supposed to be doing the due diligence on the buy side.
Yeah. But is it like similar to the real estate industry in the sense that if you're buying a business, you're expected to have a broker as well who deals with the other broker, or is that not really like they have their C-suite who does it?
I would say in most scenarios, it's probably advisable to at least have some sort of advisor. It may not be another broker on the buy side, but they should have their own M&A experienced attorney, their own CPAs. A lot of times, one of the recent transaction, it was a public company that bought a very small, basically almost an individual owner service company. So obviously that public company, they were huge. So they had the internal team, and they had this was not the first company they bought. So they don't need another broker to help them. They already have the systems and processes because they are constantly buying companies. So it really kind of depends on the buyer and their experience, whether they would hire a broker or just another set of advisors.
So I mean, that makes sense. And I think that it's for seasoned entrepreneurs, it's probably common knowledge, but I think for someone who's just starting out, right? If they're a
Right.
solopreneur or they're a small business, maybe they haven't even thought about this option, right? But
Right.
so there are a couple questions probably to answer for them. And so one of them is, understanding when it's time to sell. I think, like, how do you evaluate your situation? How do you understand when you're ready to sell? That's like part of the question,
Mm-hmm.
if they haven't even considered it. Just how do you determine whether or not this is the road for yourself? And then the other question is, what are the challenges that they could possibly face while they're going towards an exit strategy? Like, what are the obstacles that they should be aware of so that they can prepare themselves for a successful exit strategy?
Okay.
By exit strategy, I mean they sell their company.
Right. Yeah. So timing, that's a tricky one because there's just so many factors into what's the right time. Talked a little bit of the personal side, just personally, are you ready? Because a lot of times, if you own the business for 20 years, it's almost a little bit like selling your baby. I mean, you've
Yeah.
invested so much time and energy into this, and sometimes it's just hard mentally to let something go. So
Yeah.
having that internal dialogue with yourself, I think, is key for some people. And there are
Mhm.
others that start businesses that they're going to sell it in 5 years, and they have no attachment to the business itself. They're creating something of value to sell it so they can buy something else. But there is some mental part of that. But timing. Obviously there's market considerations. What's the economy doing right now? Is it better to wait a couple of years to see if the economy is in better shape, because you'll get buyers with more money and more proclivity to buy more things. So there's more opportunity. Even thinking about the demand for your product or service, is
Mhm.
it kind of at the peak demand right now? Are there a lot of competitors in your space? You're looking up to the future and you're thinking about, okay, we're about to bring on this new product or service. We think it's going to be really popular in 2 years from now. Maybe it's better to wait until there's a really big demand. Then that'll bring buyers with more money and willing to pay higher multiples. And then revenue growth trends and profitability trends and profit margin trends, all those things, you're probably looking back 3 to 5 years and trying to forecast that out. Obviously it's better to be on an upward trend at the time that you're going to market than having to hit your peak and now it's either leveled off or kind of pulling back to kind of some normalized state of revenue. So timing those things, there's just a lot of factors in that. um, and
Yeah,
then
definitely. And I think this ties into a lot of our other sessions about just being accountable, like where you
Yep.
are in your business right now and having your thumb on the dial, knowing
Yep.
where your metrics are. So not just your own business, but within the market. Like, how are your
Yep.
competitors doing? So you can have this, you know, number-based conversation with yourself, and you feel more informed before you make a
Right.
decision like this. So
Right.
totally aligned with everything else that we've been discussing thus far. Um,
And
Sorry
then
that I interrupted.
no, you're good. And there's lots of kind of 10 areas, kind of areas for an owner to kind of make sure that they've thought about, to kind of know that they're ready and maybe their business is ready. And I won't go into all of them because we've talked a little bit about them, but establishing that advisory team is kind of really critical. I
Yeah.
wouldn't go to market without knowing who's going to help you. You don't want to be trying to pick an attorney out of the phone book when it comes time to reviewing a purchase agreement. And you don't want to just pick your friend that's an attorney that has never done any, business transactions, because there's some very specific things within a business transaction that you want someone experienced in that. And, the legal profession covers a wide area. And so having someone with specific knowledge is important. Thinking about tax consequences, so CPAs and tax strategists, what's the best deal structure for you from a tax perspective, so that at the end of the day, when you get your money, you're keeping more of it than giving it to the tax authorities, whatever that might be. Getting evaluation is key. Yeah.
How do you reinvest, right? How do you reinvest your earnings so that they continue to earn for your growth, right? So that's so you're working on the sell side. No, sorry.
Yeah, part of the work I do is on the sell side primarily, and then I also help businesses.
So businesses come to you if they're interested in selling their business.
Yeah, and so we'll do evaluation first, and then take them through kind of the sell side.
What do you find when small businesses or solopreneurs come to you? What do you find is like some of the key things that they're missing or that they haven't thought of before they've come to you? Like, what should they prepare before they even enter into a conversation with you, basically?
Yeah, and it's, some of the challenges, especially on the smaller business side, and definitely any solopreneurs or someone who maybe has 4 or 5 employees. One is you've got to come with an open mind, and be willing to come to terms with a realistic price for your business. A lot of small business owners come to the table thinking their business, like I said, is worth this number that is not supported by the market or any past transactions of similar businesses. So, what the owner wants is not what the market's going to pay. And so those are things that you just got to come with an open mind. So that's usually a pretty big challenge right at the start, working with the client, is just helping them come to a realistic valuation of the business. That's why we will not sell a business unless there's been evaluation done, or we do evaluation within the last year. That's just a requirement, because that's the only way that you can kind of set the stage that, okay, seller, this is what the market will pay for your business because of past transactions, because of your projections, because of the market, whatever it is. That's kind of key to start with. And then financial documentation, especially for solopreneurs, finding a clean accounting, unless they're a very sophisticated company that's been around for a while, it doesn't exist.
Backlog.
I mean, there's a lot of them doing it. It's still in Excel. I mean, they don't even have QuickBooks or something like that, or any sort of accounting platform. They don't have an accountant or a bookkeeper. That is a huge struggle, is getting enough financial records that you can make sense of to actually even do an evaluation. And if you don't have that, that's the first thing that any buyer is going to ask for when you get to the due diligence stage. Even probably before a letter of intent, they're going to want to see P&Ls and balance sheets. And if those are not clean and understandable and make sense, and there's not a million personal expenses run through it, they're going to go find someone who is, because a clean book's it's a pretty good indicator that they probably run a pretty tight business as well. If they've thought about having a clean set of accounting records, then they're probably running their business pretty well as well. And then the last thing, especially for solopreneurs, is owner dependency. You've got to figure out how to run your company without you. Buyers do not want to buy you in a lot of cases. They want to buy a successful business that has, great systems and processes in place, trainable positions and all that documented, a strong team. You've got to basically get yourself out of the way. And a lot of the times on my small business coaching side, that's a big part of what we're doing, is how do we scale your business in a way that I could send you on vacation for 3 months and you came back and your business was still running and successful. You're going to get a lot more money for your business just from a multiple standpoint. It may not be that you have grown the revenue anymore, but if I have a business that has same amount of EBITDA at the end of the day, and one of them is pretty sloppy on their systems and processes, and the owner's doing everything, and the other one is got a great management team in place, and the owner's, sitting on the beach somewhere while his business is humming along. One might get a 2x multiple and one might get a 7x multiple of the same money for no other reason that one is running their business the right way.
Yeah, that's a really strong point. And again, it's like this running theme, because I think a lot of entrepreneurs, right, especially when you hit the last quarter, there is a moment to reflect on what you have done this year and where you're heading for the next year. So, if you're not hitting your marks, you start to think about what is it that I'm doing wrong and all of that. But I think a lot of entrepreneurs, they focus on the bottom line, right?
Right.
Whether or not they hit that, but unraveling that number means, what are your systems and processes that are leading to that? And those also have a value that isn't always captured in the bottom line, especially when you're selling the business to an investor or, another company.
Right. Yeah.
So, yeah. 100%. So let me switch it over to you. Jeff has been generous enough to offer a free gift to our members that is actually very helpful if you are looking to clean up a little bit, or at least think about what your next steps could be. So I'll let you go ahead and share that free gift for the audience. Just explain a little bit about what it is and why it would be important to them.
Yeah, so I guess the first part of it is it's just a short ebook called The Owner's Metric, and it's really just talking about what kind of one major metric you should be focusing on in order to increase the value of your business. And it really kind of goes back to what we just touched on in terms of, it's not so much growing the revenue, which almost every owner you talk to is like, well, I'm making X number of dollars. If I increase that by 20%, I'm going to get this much more value out of my company when it comes time to sell. Mm-hmm. And the owner's metric really digs into the fact that it's not the revenue number that you want to be focused on. It's what can you do to increase that multiple? Because if I can change your company in a way that you can get 7x of a multiple compared to 3, that's starting to get into an exponential increase of value versus just adding another $100,000 to your bottom line. So that book kind of digs into that. And then as well, I'm happy to have an hour consultation with anyone to talk about really any aspect of entrepreneurship, whether it's I need to figure out how to scale my small business. I'm interested in buying a business. I don't know if franchising or buying existing is the right way, or I need to sell my business. So just anything in the entrepreneurial space, I love talking about it, and I've kind of lived it for quite a long time, and I've had a little bit of success. So happy to have that conversation as well.
So generous. So you're getting, if you haven't caught how generous this offer is, you're getting the owner's metric, which is a manual that helps you sort of figure it out, like what is your next step and how to assess. And then you're also, in addition, getting a free consultation with Jeff to talk about anything that you're a little confused about or that you're thinking about pursuing. He's the guy to talk to. He's the one who's going to help you, lead you into the right direction and walk you through the questions. I mean, it also, Jeff, I don't know if I got a confirmation, but we have a live the 27th. Are you going to be able to make that?
I think we were. Yeah, I think as long as I don't have anything booked at that time, I should be able to be there. Yeah.
Okay, so another note: if you haven't hopped into VIP, hop into VIP, because you get to ask him direct questions directly, along with all the other experts. Like, this is. So I'm on a mission, Jeff. I do have a surprise question, and I'm just tying into what I'm saying now. Like, I'm on this mission to encourage other entrepreneurs to be a bit more social, because I think the power's in the network. So if you are linked together, it's a lot likely that you'll rise together. So it's a win-win for everyone, right? You win, your business is winning, your family's winning, their business is winning. That means the economy is winning. Like, it's a win-win. So my mission is to do that. And I'm doing that through, obviously, Gain, these shows, the platform, but also I am, through this little surprise question, I'm testing, sort of demonstrating by doing this, the theory of 6 degrees of separation. It says, like, everybody's separated by just 6 degrees, like one person knows the other person, all that.
Mm-hmm.
So I've been asking all the speakers. I think most of our entrepreneurs right now are on this like sprint, 90-day sprint. Let's get our numbers up. I'm on the sprint. I'm on a 90-day sprint to have a conversation with Elon Musk.
Okay.
Yeah, because he said something that sort of hit, and I just want to have a conversation with him because our next series is on risk. So like climate risk, AI risk, and all of that. So I've been asking all the speakers, do you know, or who in your context do you have that you could call today that might be able to put me, or might know someone, or might know someone who knows someone who could put me in touch with Elon Musk? So,
oh my goodness.
so
I'm gonna have to do some digging.
Yeah, it's okay. It's a question. I'm posing it here, but the answer is actually revealed in the VIP. So, so you have time to also prep your context. I think everybody gets a little bit like, oh, I don't want to pull that one on them. But yeah, you have some time to think about it, and the answer gets revealed in the VIP. So if you want to see how this goes, like it's a test. I could totally fall on my face. This could flop. This could be a stupid idea. But I do believe in the power of the ask. So I'm asking, and whatever happens, happens.
There you go. I like it. I mean, thinking about entrepreneurs in general, I mean, the most successful ones are the ones who kind of throw caution to the wind and are willing to be bold and risk more than others. So, I mean, asking the question, it never hurts. Because I could have said, oh, yeah, I know Elon. You never know. If you don't ask the question, you're never going to know the answer.
Exactly. So it's just like a little bit of trying to break down the barriers, break down the walls that separate people from doing that. It's just, I don't know how they get created, but they're there. And a lot of times we're like sort of secluded in this fear because of them. So that's my mission. Let's just like eliminate that and rise up.
There you go.
Anyways, thank you so much, Jeff. It was a pleasure having you on the show, and I hope that we get to talk. I'm sure we will again soon after this, maybe not on the show, but definitely through business. And I highly recommend anyone who just needs a little bit more advice on evaluating their business. Like really, I mean, if you're in business, if you're an entrepreneur, you should know the value of your business, or at the very least, you should know how to start thinking about the value of your business. And if you don't, get the information. There's no harm in just asking. Just, it's a free consultation. Sit down with him and talk to him and see what you can come up with for your business and what your next steps are. So highly recommend the gift, QR code, however you do this, or it's in the link. So yeah, get in touch with Jeff.